LAProbate expert, and I'm with my friend today. Say hi, Gustavo.
How you guys doing?
Gustavo Segura. And we're here for our weekly homebuyer seminar we do every Wednesday at 5 p.m. Now, you might notice that there's a little drop off in the quality of the speakers tonight. Normally, I have Patricia Castillo, and she's becoming so successful. She had a listing appointment she had to run to today, and she asked me and Gustavo to fill in for her. So here we are. We'll do the best we can. So, Gustavo, what's going on, man?
Yeah, well, rates have continued to stay where they were from the big drop that we had last week, which is positive news, right? They were above 7%. We had the inflation, rates came down. I was afraid that Monday would come around and then, the market might recover differently, but no, they've been consistent. So I think right now we have rates around 6.5, 6.75, somewhere around there. Which is a great relief for a lot of home buyers. It gives them that affordability a little bit back. So I think this is positive for the future.
So, are mortgage rates tracking along with cryptocurrency?
Hopefully it will be that fast, right? But yeah, those went down very quickly.
It is amazing if you look at the rates. I just could do a quick updated rate chart. You have the 30-year fixed rates were above 7,
Yeah,
and then boom, dropped down
boom.
below
Yeah,
to about 6.64% today.
yeah, which is
It's like,
great right now. Great news for some home buyers that are still sticking it out and they're still searching. And I think they'll be able to find some great opportunities out there with some sellers.
it's been a long run up this year from we started the year down at 3.5, but you can see that in the last, let's say, few months, pretty much it's leveled off. Let's say since September, we've been in this, high five, low sixes, mid sixes area the whole time. So things seem to be pretty much stabilized as far as that goes.
Yeah, definitely. Which is great, like I mentioned.
So what do you do? A customer can look at this and go, "That's great, but I still don't have a house. What can I do to make sure that if I buy a property, I end up with a good rate, or I don't, end up in escrow and discovering I'm paying now 7% or 8% or higher?"
Yeah, so one of the things is, making sure that you shop around. I always tell people, definitely don't just go with the one lender and that's it. Definitely take a look around. There's retail lenders, there's correspondent lenders, there's mortgage brokers like myself. As a mortgage broker, I'm able to shop that scenario and be able to see who's got the best rate for my buyer. So definitely now, we live in an era where we can double check, triple check, have options available. And I always tell borrowers, do your due diligence. I will help them out and I will do mine. But at the end of the day, I cannot make a buyer get a loan, right? So in order to avoid that kind of situation, I give them as much information. I show them the different big time lenders. I show them my rates, and then they can make the decision from there. So that way, no matter what happens down the road, they feel like they made the right decision at that time because rates change daily.
So shopping lenders and getting a competitive lender is great, and we know that you do a good job. Once you've picked a good lender, what else can you do to keep your rate competitive, keep your rate from jumping up too fast?
Yeah. So during that time period, lenders will lock in your rate, right? So this is a risk
Some
to the.
some will, some won't.
You're right. Some lenders will wait until maybe there's an appraisal coming back to secure it, and they do that because they shorten the time period that they lock it in. They lock it in for 15 days because they realize that you're almost at the end. Less risk for the lenders. Others will go ahead and will say, you know what, that's part of our doing business and we take care of that. So they'll do it for 30, 45 days. It all depends on where you're at in the process.
Now, and also some will say they're locked in and they don't actually lock in, right? I don't know if you see that. We see that as agents where the buyer is hemming and hawing and you find out, well, it's because the payment, the rate we never really was locked in. It's only,
Yeah.
they were told that.
And that's a good point too, because sometimes what happens, originators will they know what the company policy is, right? Don't lock them in into this point. But a lot of times they want to make sure they secure their client and they tell them, yeah, sure, you're locked in, thinking and expecting the rate not to change, but in this kind of scenario, 2, 3 days later, 5 days later, it changes, and then that borrower now is in a tough situation. So, whenever you're as a buyer comparing, you want to make sure that you have written confirmation of it, right? Which is a loan estimate. That is the official document that allows you to have the right information from the lender disclosed to you, the rate, the fees, what kind of loan program you got, fixed, adjustable, all those elements, you'll be able to have them in writing, and you'll be able to see whether it's locked or not. They've made it very simple for all buyers to be able to see the checkbox. It's either yes or no if it's locked in and what it's locked at. So
Yeah, and I think that it's important to undernd that not all people in this business are honest. I mean, the thing we've learned
yeah,
about the whole FTX and the cryptocurrency meltdown is, when you talk about people making money, they'll do things that are not honorable in many cases. And so that's why it's important to have a reputation. It seems so simple to go online and say, well, we're going to get a great rate. And I looked at all the lenders and they have the best rates. Maybe they do, maybe they don't. Maybe why it looks like they do is because they're telling you they're locking in and they don't really lock in. That's been my experience many times.
yeah.
Even when they lock in, and, I've been around long enough. I was in 2008 and 9 when Bank of America and Wells Fargo were basically not honoring locks because there's so much legalese in those lock-in forms. They were finding an excuse or reason to get out of the deal.
Right.
So really, integrity is really important, who you work with, and speed's really important too.
Yeah, no, you're right, because when the rate changes, if it goes up higher and you're locked in at a lower rate, that's where the lender is taking a loss on that, right? So they will try to, like you said, they'll try to make sure that if they can get out of that, they can do so and then be able to change your rate into a little higher amount. So
well, they're not losing it if they properly hedged or actually bought your mortgage
correct
rate and did it properly. One way they can make money is by not buying the proper insurance. That's where the problem is. If you don't have insurance, it's not a problem until it's a problem. And that's why companies sometimes will say, oh, we're going out of business because we didn't buy the right insurance we had to have. So
that is correct.
hey, I see we have Jessica Rivera on the line. Jessica, what's going on?
Hi, how you doing?
Good. How are you? Where are you at?
I live in the Bronx.
The Bronx. What's up, Jessica from New York? Are you looking to buy a property? Are you a real estate agent, investor? What do you do?
Buy
Looking to buy. What are you looking to buy?
a house.
Nice. In the Bronx or where?
Not in the Bronx, not in boroughs, like upstate more.
Upstate. Okay, good for you. So what's holding you back from buying right now?
Or the Poconos, because my dad is in the Poconos.
Very nice. Yeah. So what's been holding you back? There've been a lot of houses bought so far. What's between you and buying your next property? Mind sharing? Haven't found it yet? Saving money?
Well, yes. I just starting off, move up forward in life, So that started off with getting into the seminar to see how it works out, what are the steps.
Nice. Well, the first step is you got to get clear what you want and then put a plan together, right? And so I think it's important to understand. But thank you for sharing with us. You have to have a goal. Once your goal is clear, and when we teach in our seminar, the first thing we teach is mindset, because if you have the mindset of a tenant, you're never going to really take the actions of being an owner. If you have the mindset of an owner, even if you're broke, an owner. I'll give you an example. Where I live, I'm in the city. I'm in Los Angeles. I'm a block and a half from Pico Boulevard, which is a major boulevard. Runs to Santa Monica Pier to Staples Center, and a block and a half from us is retail stores, dry cleaners, and such. What I've noticed is almost all of the employees at the dry cleaners, how much can you make, and restaurants, they park on our street, drive much nicer cars than I have, much more valuable cars. Now, my car is perfectly nice. It runs well. It's clean, safe. I maintain it. It's paid for. My car, I drive a paid for car, right? And I know if I'm doing business, they're driving at least something that's 2 or 3 years old, and that payment's tough. And of course, of late, payments are even more tough. So the mindset of an owner is, why would I spend money on a car payment? I don't need to. Now, once you bought your house, once you have other things, nothing wrong with buying nice things, but I would buy cash. Like the car I drive, I paid cash for it when I bought it, I think 7 years ago. I'm not going to get a car payment. I don't need payments. I can't afford a car, I wouldn't get it. So the first thing I would urge you, Jessica, is work on your mindset. Make sure you have the mindset of a buyer, not of an owner, not of a tenant. Dave Ramsey does a really good job on that. Find somebody who's your mentor or coach who you listen to regularly, daily, to keep your mindset on, developing the strong mindset of buying a property. Okay. That's step one. But I think Dave Ramsey's a great one. There's a number of them. But that's one I send people to kind of go through fundamental financial education. Grant Cardone's another one, right? And he's a little more hardcore. He would say, don't even buy a house. You should live cheap and buy rental property so you can have passive income that's going to drive you and pay for your life rather than even buy a property. So, again, we all have to have a lifestyle and your families, and we all have different values. So find a coach or somebody that you can tune into daily, and either read books or listen to their YouTubes or something, and get your mind right on buying a property. That's the first step, and get a plan together. Okay, great. Gustavo, what do you think when you talk to new people who are looking to get started in buying a property? What do you see as the first step?
Yeah, no, definitely that, the education process, right? Like you just mentioned, having that plan and then sticking to that plan. I recently talked to someone and they had a car payment of about $1,000. And I was just like, we can't do the loan because of this. This was pushing them out. Now, those are kind of the things that are, like you said, it's nice to have. It looks great right away. You have it, you drive it around. But when you're looking for that investment and that opportunity to be a homeowner, something that's going to pay off, 5, 10, 15, 20 years from now, you want to make sure that you put that money into that. So having that plan, following it, making some changes. I see issues with down payment, so definitely that's not something that could be helpful. Also, talking to family about helping out with gift funds, being able to work with parents or family members that can give you a gift fund that can help you get on your way to be able to be a homeowner. That's something that I'm also seeing because, here in California, we have those down payments. Even if it's 3% or 3.5%, it can be a big number when we start looking at the property values.
I've been sitting here looking desperately for this post I saw the other day that was phenomenal. And it showed today's market and 6 months ago. So 6 months ago, on a $500,000 property, the rate was like 4.5.
Mm-hmm.
You would have to pay to buy. You would have had to pay $525, and I forget what the payment was. And then today, for $5,000 property, you probably get it for $475. Rates higher. They put 7%. But because you bought it cheaper than you would have otherwise, you save $50,000 on the same property. Your payment was higher by maybe 5 or 10%. It wasn't that much higher.
Mm-hmm.
And so the opportunity we have today is, yes, prices went up. Yes, mortgage rates went up. But you also can get a little below the list price in some cases, not all, but get a little below in the right case if you shop around.
Mm-hmm.
And as a result, you might end up getting the property for the same price as you might have otherwise or less you've been facing 6 months ago. Getting into that property because prices have come down in most markets a bit, 5%, 7%, and 10%.
Yeah.
And a seller who you find the one seller who's more anxious and get a better deal.
Yeah.
So it's a great time to buy property, but you have to have the right people, you have to have the right lender. You have to have somebody like Gustavo who you pre-approve with him. He's calling that listing agent. You have a written pre-approval letter. He's calling as well to push the deal. You couldn't get that. 6 months ago, I can't speak for Gustavo, but most lenders were too busy to be bothered calling lenders or writing refinances. Now, lenders are out of business. I had a lender who called me, wanted me to, interview him, put on my YouTube channel. We had an appointment today. He just no-showed. And I texted and emailed, I thought we had an appointment. Oh, I'm out of town. I'll get back with you next week. He's so depressed because he has no business. He's just taking time off and going away. And I think nothing wrong with vacation, nothing wrong with taking time off, but I know it's not coming from abundance. I know it's coming from scarcity. Now there are lenders who, like Gustavo, here he is. You're not going to find too many. I've talked to a lot of them. Here he is, ready to help you, and he's always ready to help you. So, anyhow.
Yeah. No, thank you for that. Also too with down payments, I'm seeing families, help each other more and more. So you have non-occupant borrowers that are helping. So if a down payment or credit, is an issue, I'm seeing a family member help out by being on that application. They're not going to be an occupant on the property, but they're helping out. So, there's a lot of different creative ways of looking at getting that home ownership. Sometimes when you're in an area where property values are high, down payment could be an issue. Income, there's options. So, the message I think I want to also help push out is that, don't think that you need that 20% or don't think that you don't qualify. Talk to someone, run your scenario, run your situation by them. Let them, take a look at everything and say, you know what, we may have some options. It's here, here, and here, but let's see what we can do for you. So don't give up on that dream.
It's funny you use that phrase because one of my best friends, Greg Frost, he was the first billion-dollar producer in the mortgage industry. One of my good friends from a long time ago. And when you went to his office, it was like a doctor's office where you go in and there'd be like an intake, kind of like a nurse, an intake person would take your information and run your credit, get everything ready. And then he'd walk in, he'd look at your credit report, the numbers the person calculated, and he'd underwrite your file in like 5 or 10 minutes right there. And either they would give you pre-approval and he'd sign it right on the spot, or he had another pad that he called Don't Give Up. And he'd say, this is your plan to buy a property in the next 2 years. You had to make more money, or you had to pay off bills, or you had to save money, or improve your credit, but whatever it was, you always left with a plan that you said you could do in 2 years.
Yeah.
And you'd have people come back 2 years later with those sheets saying, hey, you said do A, B, and C. I did A, B, and C. Can I buy a house? And you go, check. Yeah, you're ready to go. So it's about a plan and executing a plan. It's not about, your life is not about the destination, it's the process. Yeah. And I can tell you, when you put the money together and you save money, you finally get that house. It's so much sweeter. My wife and I, our first house before we bought it, we were living in Diamond Bar, California, which is a nice city. But the worst part is the north part. And right at the north part, there's the dumpiest apartments in the whole city, the worst apartments. There was helicopters overhead all the time, and it was crime rate. It was terrible, but it was the cheapest apartment in the area. We had a 1-bedroom. We had no furniture other than a bed, a dresser. We didn't have a table and chairs for most of the time we were there for the first, we were there for a year. And, but we saved every penny went in the bank. We didn't spend money on anything. And I remember we closed escrow on our first house. It was like all the money in the world. We owned it. And we ended up repainting and carpeting and buying things for it. And a year later, flipped that for $100,000 profit.
Yeah.
So it's amazing, but it was sweet because we worked so hard to get there. So if it seems impossible, it's not. Get a plan. Call Gustavo, sit down, figure out your credit, figure out your income, your ratios, and figure out what you need to do to get in a house in a year, 2 years, 3 years. Get that plan and work that plan.
Exactly. No, and that's an area that I was telling you about, the $1,000 car payment. I told him, is there a way that you can switch this out? That's $1,000 that can be freed, turn into a mortgage payment. Can you do that? Can you look at buying something else? Even if you drop that and you get a lease for $300, right? All of a sudden you have $700 now eligible that can go towards your housing. So there's definitely a way to do it, and part of that after we give our feedback is that buyer willing to take those steps to get that done.
I have a good friend who came to me in real pain financially and crying about the situation. And he said, I don't have financial troubles. We went through it, and he had a beautiful truck. His payment was $1,000 a month. I think it was $1,200 actually, $1,200 a month. But he needed the truck. I said, get out of here. You don't need that truck. You can buy an old truck. You don't need that truck.
No.
And so we put a plan together. And every time I would see him, I would say, hey, big money, what's going on? He goes, I'm not big money yet. I said, you have to be driving a truck that's worth, I think it was $70,000 or something, $60,000, kind of a crazy number. I said, I'm pretty well off. I'm not that well off. I'm paying $200 a month. I'd love to have a truck that nice, but it's not that become a priority for me. So,
yeah.
Okay, so I think that's what we wanted to cover today. Gustavo, anything else you want to put out that's relevant before we wrap up?
No, I think these are great topics about, buyers asking, find out more. Don't assume there's options. Lending options always change. Even if you've had some credit issues before, whether it's a BK, a foreclosure, there's time periods for everything. It could be 1 to 4 years, 7 years for the foreclosures. There's a lot of different scenarios, and there's always an adjustment that happens as we keep going on in this industry. So talk to your originator, find out more, get more information, and don't ever think that you can't do it. You may not be able, like you said, now, but it will be in the future. Well,
the last thing I want to wrap up with is I want to say the second time we missed Patricia, and so she's listening to this. We said it not once but twice. So Patricia, to prove you heard that, you need to put in the comments that we said we missed you twice, or else you didn't really listen to the whole episode. And she was going to try to come in, but she's out on a listing appointment. So
No, it's
she's
great,
got a new
too.
listing yesterday, and so she's killing it.
Yeah, she's doing great.
For all the talk about the market being slow, I'll tell you this: I took a huge listing last week. I'm real close to putting a deal into escrow here today, maybe tomorrow. I'm busy. I've been working hard, and as a result, I'm busy. And so there's great opportunity for everybody. If it's the right time for you to buy, we're here to help you. So Gustavo, if someone would get a hold of you, how would they get a hold of you?
Yeah, please do reach out. Cell phone is 714-334-4563. That's the best way. I'm always next to it. So call or text.
Fantastic. And
There you
also,
go.
you're available at SenderaHomeLoans.com. And there's the
Correct.
website, there's a
Yeah.
picture, and there's the phone number. And so
Yeah.
give them a call and get started. I'm Bill Gross. I'm available on social media at Bill Gross EXP. If I can help, please reach out and call. And then we'll be back next week on Wednesday with Patricia Castillo with some next update on the plan. But again, step one, get your mindset right, get a plan together. We're here to help you. Have a
Yeah.
fantastic week, everybody. Thank you so much.
Yeah, thank you, guys. Thank you, Bill. Have a good one.